Hello, guys. Welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. All right. Hopefully, you guys out there are doing great, and of course, in good health. The pandemic didn't stop; it's still continuing. I believe that we have no choice. It will be part of our life. So why don't we just kick the negativity out and look forward for the positivity? All right, so I've been away for quite some times. I need some rest. Of course, I'm quite busy with my other things. So I'm back right here, and you will be very surprised. All right, about things that I'm gonna share with you, especially in this video. I believe it will definitely will help you guys in your trading of a supply and demand, and of course hopefully it will help you guys gain more money from the market. All right, so let's cut the crap and then let's start with it. So first of all, a lot of us do not know what is a maximum pain level, right? We call it maximum pain level, maximum pain level. All right, which I usually will call it as a MPL, as a short. So it's actually a manipulation, right? You have to understand this thing, all right, in order for you to look at how or what I'm going to share with you, which is very, very interesting. So first of all, we are looking at a one-sided setup. First is the sell setup. So I don't care how the price is moving. So eventually, at almost the end here, this is the pattern that I'll be looking at. All right, the price is moving in bouncing up and down. All right, bouncing up and down. So here, what we have is the resistance. Right, some of us may know it as a support and resistance, where the price keep bouncing up and down over here. And the thing that I will be looking for is that the price, when the price suddenly spike up before eventually have a great fall, right? So these are the place that I'll be looking at, right? If you look at it, this is the manipulation from the big bank or the big players or whatever you want to call it, all right? So over here, especially over here, when they have this kind of movement, a lot of people will, or should I say, have a impression or have no knowledge about the supply and demand will be thinking that the price likely will drop at this point, right? At this area. Let me make it clear. All right. So a lot of you will think that the price might, sorry for that. All right, over here. And what happened is that a lot of you will place your stop loss over here. All right. And then you have your sell limit right at this point. So eventually, all these kind of pending orders are visible to the big players, right? They definitely know. Of course, they do not know your personal or specifically your trade, but they will know where the big money is, where the money located is, right? Because they can see the overall big pool of money. So what happens is that the bank usually they will spike, all right, to make you guys stop out, and then eventually they will fall to where to the direction that wanted to. All right. So what we are looking at is that we need to look at this kind of pattern. This is also called as a maximum pain level because at this point, the pain, or maybe some of you might have it, the stop loss even higher. You cannot tolerate this pain because the stop loss, the red color in your account is killing you. So that's why we call it as a maximum pain level. All right, let's get this out. What we are looking at is that we are looking at this point, at this point, at this place, where the price, all right, where the price likely to come back to this area for a fall. All right, for a fall. So this is where we need to place our trade for a fall, for the sell, right? This is what we'll be looking at. Then there is nothing new, right? There is nothing new. So bear with me. What I'm going to share with you is another type of confirmation, right? Not only one, but two type of confirmation. Believe me, this will definitely helps you guys a lot. So when the price comes back, there are a few things that, or there are three types of confirmation that we can look at it. All right. So I'm going to make clear. The first type of confirmation is what I always mention a lot of time. All right. It's the price action. All right. It's the price action. How come it's like that? Wait, give me a moment. It's the price action. So what do I mean by the price action? All right. When the price coming back to this zone or to this area or to this supply at this uh, for this example, you'll be looking at how the price comes back. It might, all right, let me get this up. What happens is that the price might make some fake out again before it have a good fall. Nice big fall. All right. Actually is the same pattern as what we are looking at over here, but in a smaller area, right? It might happen like this: the price action fake out, or it might happens to have a compression. All right, compression. Let me see. All right, compression. It will be like this, right? Where the price itself destroy the demand, right? Demand destroy and then move up before the break fall. So these are the price action. Of course, there are other type of price action like the SR flip, all right, and the combination of the fake out and a lot more, all right, which I'm not going to share here. All right. So the other type of confirmation, okay, this is interesting because I did not share with you guys uh, uh, about this. So what you'll be looking at is that candlestick. All right, candlestick. How do we identify candlestick? So what happens is that we'll be looking at, let me make it in a green color. All right. So the price is moving up. All right, moving up. It does not matter. So the price move into this zone. All right. Now imagine that this is a live movement. This is live movement. The price move into this zone. So what we want is that before the we have to make sure that the price close. Example that we are looking at the, let's say now we are looking at day one, right? So make sure at the end of the day or at the end of the candle must close, all right, below this area, all right, below this zone. Means that there is a big rejection or means that our theory is correct, right? There, over here, you can do one thing. You can directly make a sell, right? Directly make a sell. Of course, it definitely won't drop like a brick, right? It won't drop like a brick, but there is a very high chance the price might comes up a bit, all right? It might looks like this, all right? It might look like this. It will comes up a bit and then continuing, okay, the fall will be like that, right? So over here, this kind of trade, it depends on which time frame you are looking at. So the higher time frame is, the more the bigger stop loss it is, because your stop loss has to be placed above the zone, right? Has to be placed above the zone. So this is the second type of confirmation where you have to wait for the candle to close below. It does not matter where the wick is, all right? You don't go into the trade yet. You wait for the price to close below. Then this is a nice area for you to make a sell. Right? Direct sell. No pending order. Right? No buy limit, sell limit, no nothing, no stop, nothing. So this is second confirmation, which is you'll be using the candle candlestick. All right. And now the third type of confirmation, which are my favorite. My favorite. All right. I believe I've shared with you guys. It's just that sometimes you need the refresh um, videos like this to make you guys realize that it is going to happen or it is happening. All right. So what am I talking about? The third type of confirmation, which is my favorite. Right? When the price comes into this zone, it does not matter whether it's touching or going into this zone. All right. What we'll be looking at is that whenever there is the price going into this zone, you'll be looking at small QML, all right, in a small time frame. So example here is the day chart. I'll be looking at maybe a H1 or H4 or M30. It does not matter. You'll be looking at the small QML. There are benefits of looking at this QML in small time frame. First, your risk. Imagine that your risk over here is I would say 100 over pips or maybe 90 over pips. It might reduce to 10 pips or it might even reduce to 20 pips. I won't exaggerate over here. It might reduce to 10 pips or 20 pips. So which is bearable, all right? Even you lost it, you don't feel that the pain, right? You don't feel the suffering. So what you'll be looking at small time frame is that the price is making a QML, all right, where the price will comes back to hunt the QML and then the drop. Of course, some of you do not know what is a QML. Just let me explain. Price moving up, all right, and then suddenly there's a drop, right? Then the price comes back before the big drop. So the criteria over here is that the price has to break this low, right? Has to break this low. So this movement is actually called above and under. Means that it's above the previous high and it's under the previous low, right? Above and under, right? So a lot of story. Let's not get into the story. Let's get into the real deal. All right, I'm gonna show you an example over here. Show you example exactly like what I've written here. And sorry for that. Let me make clear. The third is the QML in small time frame. All right. Mm, Sorry, QML in small time frame. All right. Let's look at some example here. So this is an excellent example. All right. So first of all, what we are looking at is Euro JPY daily chart. Okay. Then if you look at it over here, we have a very obvious fresh demand zone. Right. We have a very supply zone. We have a very fresh supply zone over here. But we do not know is this supply zone uh, tradable or not tradable. So one of the criteria of being a good supply and demand traders is that you must know how to play about with the time frame. All right, always switch to lower time frame and switch to higher time frame to look at it. So in this case, you'll switch it to lower time frame, and what you can see is that over here, right? Some of you might recognize it, some of you do not recognize it. So if you look at the price is moving up and down before the sudden spike up and fall. Exactly like what I've drawn over here, this pattern. All right, similar with this pattern. Look at it properly. Let me enlarge it a bit. All right, price is moving in range, right, going up and down. Suddenly there's a spike and then the big fall. Right, so means that actually I can reduce my range into this area, right? Okay. Let me keep it this way first. Let me put a line, then you'll see what I'm trying to tell you about. So let me put the horizontal line, adjust the line. All right, so if you look at this area, there is a lot of resistance, support, resistance, support. All right, means that this is actually a very strong significant support and resistance, very strong. This is a very strong, right? Means that what we are looking at is this zone right here. At this moment, we're looking at something interesting over here. All right, something interesting over here, but you do not know how to trade. You do not know how to trade, right? So the second type of confirmation, just now we are watching from the daily supply and demand, right? Daily supply and demand, right? Now let's look into the confirmation that we talk about. The first confirmation is the price action. Is there any good price action? Not really, not really. There might be some fake out, but does not looks good. All right, does not looks good. So what is the second confirmation that we can look into? Candlestick. Remember candlestick. All right. So if you look at this candlestick over here, all right, this candlestick over here, it came into this demand supply zone, this daily supply zone, and then eventually it closed below the supply zone. Means that there is a significant resistance or significant pressure of sell. You can directly place your sell over here and your stop loss above here, which is actually quite big. All right, quite big. That's why I told you that my third and final confirmation, which I like the most, QM in small time frame. QM in small time frame. You need to switch to lower time frame and take a look what is happening when the price came into this area. Right? So if you go into small time frame, you can see, oh, this is fantastic. For me, all these things is about practice. All right, it's about practice. You have to train your eye. At one glance, you must identify where is the QML. Have to be very, very fast and very, very clear. Over here, very obvious QML. You switch it to 30 minutes, definitely there is one. Right? So if you look at it, the price is moving high, low, all right? And then eventually high, low, high, high over here. And then the sudden drop, all right? The sudden drop, right? This drop broke this low over here, right? Broke this low over here. And let me get this out. Which which supply zone that initiate this move that breaks the low over here? All right, over here, what we can see is that there is only one single fresh supply zone. All right, of course, some of you do not know how I define my supply and demand is a bit different from other people. All right, so I'm gonna stick to my way because it works for me. So this is my supply zone over here. Can you see it? This is my fresh supply zone. I'll make it into other color again so that this is my fresh supply zone, the one and the only supply zone. And eventually what happens is that the price comes into this area, all right, react and then drop, right? And then drop, and then you have a very nice R&R all the way down. Of course, I'm not going to say how big is the R&R. It's definitely worth it, worth it, all right? So how do I drop from a high time frame to lower time frame? Is about experience. You need to do it yourself, right? Remember one thing: watching the videos or the knowledge that I share does not make you a great trader. What you need to do is that you need to go back, practice, draw a lot, and then identify all this kind of setup. The patterns will repeat itself again and again and again, right? So over here is actually is very, very simple, right? It's a very nice QML. And this is what we call as uh, fast, sorry, I might get confused myself. Uh, this is called as a quick quick reaction QML. Yeah, quick QML, right? There's another late QML. This is the quick retest QML, where where is the QML level, all right? And the place where it reacts is very, very similar, all right? So it's very clear. This is a very simple setup. And from there, you can see that I reduce my risk from 45 pips or 46 pips into 7 pips. All right, 45 pips, 46 pips into 7 pips, or you might widen your stop loss a bit. due to the spread, right? So it might be 10 pips, right? 10 pips and your reward is huge, huge. So this is how I do my sniper entering with confirmation, right? Uh, there are three types of confirmation, of course, which is my favorite. I've told you the QML in small time frame. And do I use the other two confirmation? Yes, I do. But my favorite is still the QML in small time frame. All right, so that's all from me today. Hopefully, you guys really learn and then uh, test it out. Okay, do not believe a single words that I said. All right, test it out yourself. Right, the pattern keep repeating itself, and then this thing keep repeating itself. Right, do not trade when there is no setup. Only trade when you have a confirmed setup. All right, that's all. Hopefully, you guys like the videos that I done for you. If you like it, please do give me a like. All right, and hit the subscribe button. All right, so see you guys next time. Bye.